somebody walks into a store, he is wanting to buy a consumer durable, which could mean refrigerator, mobile, television, etc., etc. We will give credit at point of sale. Self-employed guy who is otherwise not being served by banks, institutions, etc., etc. They always, not only they come, they show a loyalty and a stickiness which is unparalleled.
You can't dig yourself out of a hole which is built by credit. I have never till date checked my American Express credit card statement कि जो minimum due and जो amount due है, does it match my expenses? Till date, I have not ever checked that.
As much of a mercenary instinct I have, IPO is just an event for us.
Ranveer, welcome to the barber shop. I remember my first memory of you was actually a reputational memory and then a actual one. So I don't know whether you remember this, but this is 2011, 13 years back. And I was working with you on some LOP. So for the people, LOP is basically a proposal in McKinsey for a potential client, and Ranveer was senior, much senior to me at that time. I was probably 6 months into the firm, and your reputational memory was that, oh, you're working with Ranveer on a proposal. He's one of the hardest working people I've ever met, and build that muscle when you work with him. I said, it's a proposal. He said, it doesn't matter. Proposal, client, whatever. Who told me this? One of your, Aditya Sharma told me this, okay? So then I worked with you, and on day 2 or day 3, I don't know whether you remember this, I came into the office around 10:30, 11, and I told you that there's a swelling on my stomach, and you said, I said, so I might be a little inefficient, and you told me, just go to the hospital, dude, what is wrong with you? And I went to the hospital, and it was a hernia, and in the afternoon I was in an operating theatre, and couple of days I came back, and it was a minor surgery, but I came back, and you were very different from your reputation. I said, how is it going? I said, what's happening on the proposal? Did we submit what the document we had made, etc.? It doesn't matter, it's okay. Just get well soon and so on. And I remember that the first time I always wanted to work with you after that. I ended up working with I never worked in financial space in McKinsey, but I remember that very small interaction with you, which was very early in the career, and it kind of warped my sense in the right way around what it takes to kind of be an empathetic leader in a high pressure environment where everything seems to be about the work, but then you could take a step back and say, it doesn't matter, your health is most important. So I wanted to start this conversation off by telling you that I remember this distinctly about you. I don't know whether you do though.
No, first of all, thanks for remembering. I do have, I can't claim vivid memories, but faint memories of that. But there's also a testament of sometimes these perception and myths, they go a long way, right? Completely contrary to reality. And but glad for all the great memories you have on that. I do also remember one of the thing I have a weakness for was I love chai ki tapri. I go there, get the best tea, and nothing beats better than having a captive audience. So I think, you would have come like 6-7 months there, and I see a guy who's so eager to hear me. I said, let's him get, and the next meeting can get postponed, right? And I think that is my inaugural memory of starting some interaction with you. So yeah, I do also have fond memories of, you have always been a great listener, and perhaps that also is a testament to, what you have started. But yeah, some great time from those days, man.
Yeah, no, I just crossed Nariman Point Express-Towers, like that front face of the office.
Yeah.
It doesn't look the same. The office is moved. It looks like a ghost town.
It is dead like a doornail last time when I was there. Almost as if वो movies में दिखाते थे ना 20 साल पहले यहाँ पे कोई रहा करता था and all that. You almost get this hauntingly, different feeling there. So no, I understand what you're talking about. I've been there many times.
Yeah.
But whenever I come there, of course, there's a rush of memories which hit you for all the action that we have seen there.
Correct.
But yeah, it is no longer the buzzing place it used to be.
And Express-Towers, that entry used to have all of the McKinsey cars, Oryx cars. There used to be a buzzing reception, people coming in and out, flights, this, and because people had to leave from there fairly in advance for the airport. So you would see a lot of people move at like 3-4 p.m. on a Friday, etc. And now it's just, there's nothing there. On one side, the Trident at Oberoi has remained the same.
Yeah.
On the other side, it's completely dead. And I got about investor meetings and all, and I'm like, arey yaar.
I think Nariman Point has become a backwaters of, what it used to be before. So yeah, I understand what you're saying. There is barely that hustle bustle which used to be there before. Now, I think most of the corporates have moved also to BKC and Lower Parel and many other things.
Yeah.
But yeah, Once you go there, you almost, it is impossible not to be nostalgic.
Correct. And especially that basement, because that's where like a lot of, it was a passage of rights almost for people who joined McKinsey. For the viewers who don't know, I think Ranveer and I share our common employer, which you spent many years and you joined before me. But the basements of Express Stars was like a passage of rights. Like to earn your seat at the table of McKinsey partnership, you had to spend you had to do a due diligence or two.
Yeah.
You had to be a part of FIG and kind of build the muscle of working hard. And now you see that place and like it's all, I don't know whether like there is how much of the institution is physically anchored to that place, but I feel like it was. But anyways, coming to Ranveer, what you have built over the last 9 years, you have gone from being a consultant. You spent many years at McKinsey to starting a company in the financial services space. It was your expertise at the firm, and then kind of building it into high scale, profitable company, and very healthy profitability and clean line of sight to an IPO, which you and Krishnan are on. But just can you, for the viewers who are watching you and may not know what Kiss 10 Ring is, just break the business open. What did it start with? What is it like today? And then we can go deeper.
See, there are many, many things to talk about, because even the story over last 7 years since we have been in inception, it has been a sinusoidal one, like anybody's journey. I mean, you have seen yourself. When we started with a lot of doubt, dilemma, which anybody will start with. Our intent was to do credit offered in a manner where it is seamless, easy, convenient, so on and so forth, right?
To who?
To a set of people who otherwise are completely deprived. Deprived not in a sense that they are people who would not get money or who would not... I mean, let me say this. Having seen the banking very closely, one of the recurrent ironies of our banking system is that there is a deep-rooted suspicion. If a customer goes to the bank and he's wanting to take money, first of all, the traditional institution, I say it with all respect because they have done great stuff as well, they will see you from toe to top. They will get all and every data, every document linked to you. Then they will get all and every document linked to your relatives, guarantors, so on and so forth. And after you have gone through all the travails, everything, then your loan gets sanctioned, approved. So, I mean, at one level, of course, there is a time involved, which of course in this world adds to the inconvenience, but it's not a dignified process. It's a process which can make people feel rather, part humiliation, but part, it's one of those things in India which people have taken as granted. Fine, nothing, right? Many times we stand in the queue, which can be a baseless queue. Many times we stand in many other things. So that's one of those things. So when we started, the idea was to basically, there is a segment you can go after. This segment is basically people who earn between, say, 25,000 rupee to 1 lakh, per month. And they don't have steady income. Now, the other thing which exists in the market, as you know, if you're a salaried guy, you can easily get a credit. But if you're a self-employed, you are an uneven cash flow, you go through bizarre vicissitudes of life, which we all go through. Oh, whole behold, you cannot get a loan easily.
3 months pay slip.
Pay slip, this, that, and ye nahi, balances nahi hai, all of that. But anyway, those issues we knew. I mean, the reason we started, I still remember, so when I left McKinsey, I started my own consulting firm, me and Krishnan, which was supposed to be analytics and strategic management consulting. When we left, the first thing in my mind was, yaar, jitna main McKinsey mein kamata hu, utna to yahan pe kamau, right? And we were going through like any other venture, right? So anyway, we did fairly well. At one point in time, we used to have like 60, 65 consultants, really in all the big, so I ran that for like 3 years.
From when to when?
This was, I left 2013, between 2013 and 2016 and 79.
Okay. Substantial amount of time.
Substantial 3 years. And in the beginning, there was a struggle. But once we had created our roots there, it was, I continue to believe, from a cash flow perspective, there is not a single business as cash flow positive as a consulting business, right? So part of me feels bad that I left that this thing, but anyway.
Break open that consulting business, because like I would love to know do I make enough money as a consultant versus as a consulting entrepreneur, if you will?
I think they're two different things. Of course, when you're an entrepreneur, not consulting entrepreneur, when you're an entrepreneur, of course, you have, paper money and which is hugely valued. Words like unicorn were not part of the lexicon that time, but today it is. And then you can do the math and all of a sudden the number looks, I said cash flow. And it's also to do with, what kind of consulting you were doing. We were almost we wanted to set up an analytics company first. Then when we realized that the ticket sizes are going to be very small and going to be, you have to put so many people and this is what you get. So we ended up doing strategic management consulting. So very similar to what McKinsey was doing. But of course we had relationship, we could build relationship and did some really, really game-changing work with some of the big institutions, right? Almost the same set of institutions which the firm was serving. We were emboldened with money. Now that money was there, I still remember how we started. You know Krishnan, right?
Yes.
So...
And I mean, I know him from McKinsey. I don't know him as a person because we never worked together at all.
Yeah. So in our many different things that we do, we ended up serving World Bank, Bihar government in a big way, and we would make some, travel to Patna quite frequently. I developed fluency with all these places called Madhubani, Muzaffarpur, Takshila and all that. So I was coming from a flight from Patna, me and Krishnan. We were both sitting on the aisle seat. He's sitting there, I'm sitting there, and we were sitting next to the loo. So, and we were, bitching about life and talking about, boss, enough. What is the next gig, right? Of course, we know these problems exist in financial services and we have to do this.
And this is like 3-4 years into being a consulting entrepreneur.
Almost 3 years.
Okay.
Almost 3 years or perhaps 2.5 years because that's the time when the idea was germinating. And we were talking about, there's a big opportunity, some UPI is coming up, but UPI will take a lot of time. And I know Aadhaar has been there for long, etc., etc. We were evaluating. And while we were doing it, because of the queue to the loo, we had to take a break in our conversation because people will queue up and they will stop our conversation in between. And so we are negotiating our time in between whenever we get it and all that is going on. And when we landed, like a typical, how we do those problem solving sessions, we said, okay, so 5 cheezein karni hai, you do 3, I'll do these 2 and we'll come back. And that was in a way the germination of, okay, let's start thinking. And during that plane, travel, we also discuss, yaar hum log bolte hain, karte nahi hain, so now this time we have to kind of be very precise, And then one thing happened after the other. We created the business plan. We ended up setting up the company.
This is separate from the consulting.
This was separate from the consulting company, but we borrowed the name. So our legal company name is still called Seekreva Capital, which is a borrowed name from Seekreva, which was the name of the consulting company. And so that's how we started. When we started, we wanted to do consumer durable financing.
Okay. Explain that for people who don't understand.
It is basically if somebody walks into a store, he is wanting to buy a consumer durable, which could mean refrigerator, mobile, television, etc., etc. We will give credit at point of sale.
Okay.
And the big thesis there was, of course, the market, it's a cliche and a catchphrase to say that market is underpenetrated. It was underpenetrated in this segment also. Plus also, we thought credit offered as part of journey has a different appeal altogether.
Okay.
You and I will not take credit, but suppose if you can imagine you are in that state, you go there, customers want to buy a 20-inch TV, but if credit is available, perhaps they can think of buying 40-inch.
Correct.
So there is this appeal which is there.
And the consumer is thinking, okay, I will pay this off over a period of 12 months.
I'll pay this off over a period of time and I may not have the full quantum right now. Or if I have the quantum, I may have to compromise some of my other this thing. And we did this. We partnered with some local store in Parel and we said, now we'll start giving you credit, etc. He also looked at it in a very bemused way. Who are these guys? There are other people, Bajaj, but he said, fine, if somebody is coming and helping me get the credit, why not? So that's what...
point of sale, consumer durable. So it's a very specific thing you were doing.
Yeah, very specific. And the opportunity was massive, right? Because, Bajaj was still there. They were the leader in the space. But they were not present in many stores. Today, not a single store or an inch of space you go in where you don't find players like Bajaj. But that is what we started with. And I still remember, I think we were 15, 16 of us. We did our first product. First product means we sold, we gave credit to a guy. I don't know how we convinced him. I don't remember that. And this guy wanted to buy a mobile for his girlfriend. And we funded it. He wanted a specific, brand and a specification of mobile, etc., etc. And he was very glad to meet us, and we were also glad to meet us. This is one first customer, my first. Just
And were you in the store at that time?
No, I was not in the store, but somebody else was in the store. But and just to not to overdraw the contrast, today I have 11 million customers. He's my first customer. It has. So this guy, I haven't met him in person, but I remember the face, and I'll tell you why. So we approved the loan. So the guy said, no, the phone is going to come from the other shop. You know, some of these things they do, मेरे पास नहीं है, but दूसरा से कोई बात नहीं, 6 बजे तक आपको मिल जाएगा. And he had some so-called momentous event with the girlfriend at some 7:30 or and it got delayed.
The phone.
Phone. And all this while he's calling us because it's an important event for us. And we are trying to manage. His girlfriend problem for the briefest of moment, for the briefest of few hours, became organizational problem. We were trying to arrange for the phone and trying to get it and this and that and everything is happening. Finally we got it. And at I think 9:45, 46, we delivered the phone. His words still ring in my head. He said, you guys suck. You guys, I'm never going to do anything with you. Of course, it was a good feedback with the first customer.
Yeah.
But I think it changed few things for us. I think one thing we realized, our chief preoccupation, pastime, obsession has to be customer service. You cannot let this thing go. And the fact that it still stays with me, almost in every situation, one has to make a call between ye karna hai, wo karna hai, always think customer first. The reason I'm saying this because, financial services, people have this notion that rules of customer orientation and servicing can be suspended like anything. I think wholly wrong. And of course, the second thing it taught me, this old adage or epigram you call it, you never get a second chance to make the first impression. So that's what we went through. But that's how we started with.
And you stayed true to the thesis of consumer durable finance?
We continue to stay true, but there are many, many things which got added. I mean, just to give you an example, just before COVID, this used to be close to around 40% of the business. Today it is mere 1% or 2% of my business. Because there are many other things you can do. We actually, talk about changes in the business model, learning, etc., etc. I don't think we have invented it, but perhaps we have a better claim to invention than anybody else.
Okay.
This credit QR code is a simple QR code, very similar to the black and white. Just to differentiate it with black and white, we have made it yellow, this thing. We put it at the store.
Okay.
There's no manual person. We never put that in a consumer durable store. We don't want to outcompete others. No. I don't want to serve a customer who already has like 10 other options. So the stores which I put out, there are pharmacies, there are food outlets, there are apparel store, kirana store, all and every kind of sports equipment, etc., etc., where you don't find such a thing, where the purchases are of $2,000.
Okay.
Now the question would be, who is going to take loan for 2,000 rupees?
So how does it work? If I'm buying something for 2,000,
you get into the store of say pharmacy,
okay,
right?
2,000 रुपए की चीज खरीदनी.
2,000 की चीज खरीदना है. The merchant basically says that fine, if you want to pay through debit and credit card, you can pay, or you can just scan, go to my app, run a process of 4 to 5 minutes, and get a limit of 20,000. You get a limit of 20,000. That 20,000, I can use 2,000 here. The remaining 18,000, I can use it at any of my other merchants, or I can use online, Amazon, Flipkart, etc., etc., or I can just transfer the money in my bank account. And with UPI coming in, a lot of people prefer that because it is only 2 more click away for them to start accessing it. Now, when we started, of course, the lure...
But how do you know, how do I pay you back then?
Oh, you pay me back...
I'm not someone who borrows easily at all. I'm not even someone who Amazon, Big Billion Day, Flipkart, this, that, yahan pe, EMI. I've never bought anything on EMI other than a car, which I think was easier. But other than that, I don't own a home.
Yeah.
I've never done this. So explain this to me, how would it make sense? So I buy something, I borrow 2,000 rupees from you, buy the medicine. How do I pay you back?
You pay me back. I don't take any, the word they use is NASH. I don't want to make it technical, which is a...
No, make it technical.
It's a NASH thing, auto debit, payment we do. So what we do is for 70% of my customer, I don't take anything. I just tell them, fine, you have taken the money. After 45 days, this is the day you have to just pay back. That's it. Now somebody will say, and this is again a big myth which exists in the market, people, why they will default and you lose money, you're just given him without knowing. And I think what we have made a difference, because there are hundreds of companies doing instant credit. What we have made a difference is basically being able to identify that here is a customer, I can trust them.
Okay.
After 45 days, I have not taken anything. If he doesn't pay, he defaults. Then I have a set of measures which is more like, collection practices, etc. I do. But talking about, do I take anything from him? Nothing at all. For the 30% of the people, I do take something which is called a NASH mandate, which is similar to saying every month I'm going to take out whatever is your EMI amount pertaining to this from your bank account. So I do that for 30% of the customer. And the reason I do 30% of the customer, because some customers, they basically want a higher limit. They don't want 20,000, they want 50,000, they want 1 lakh. They are at some other store. And in that case, the way risk model and, this thing was, I would rather basically take some more comfort that the money will be coming in. So that's what I do.
But how do you know? Like, how do you know whether it's a 70-year-old person who is very, debt conscious? The older people are kind of, mere pe karza hai, etc. They're very insincere. Some of the other busier people who won't remember, they might be a lot. Like, for example, this is a McKinsey example. When they had a credit card of HDFC, which was put on me by McKinsey because I had filled up some form. The credit card came to the McKinsey office, stayed in that thing. And I have never seen that credit card till date.
But they charge you.
And the amount of increase, like 300 rupees, 325. But because it was increasing, my CIBIL score was getting screwed and I had no idea why. Because I had one MX and I was paying for it. But I'm the kind of person who, in the data, I was a defaulter. Because I was just busy.
And you were not aware also.
I'm not aware. So now how do you make sure that people who have the intent to pay back will pay back? Or do you think that's large enough a number of people and you don't need to make the check?
No, you absolutely have to make the check. Couple of things. First of all, you are one profile and you are perhaps representative. But of the many, many different profiles, you are one cohort. Similarly, there are many cohorts and one has to cater for all the cohort. 40% of my customers, 41-42% are credit card holder.
Okay.
When I ask them that, fine, you have a credit card, why are you taking credit from me? Right, credit card would have been easy. And I get many, many responses. It has changed, by the way, over the years. The response I used to get 3 years back versus the response I get now. There is a general distrust I know I'm into financial services, but if somebody asks me to explain, and good that this is not the question you are asking, what is MAD? M-A-D. MAD is minimum amount due in credit card. कि तूने 100 रुपये का खर्च किया, लेकिन तुझे 100 रुपया नहीं देना, 10 रुपया देना.
Correct.
Right? Nobody in the industry understands what goes in the calculation of that 10.
What is that?
It is basically, so the whole credit card industry works on the fact that if you have spent 100, you have to pay only 10, which is the minimum amount due. The remaining 90 you can roll over.
Okay.
Or revolve. When you revolve, you are paying interest on 90 and you are paying a decent amount of interest, right? Person can do once, twice, and all of a sudden when the thing comes, they get into this thing, oh, where am I paying all this interest? So anyway, the first reason which comes is there is a general sense of distrust, if you ask me, which makes people go. I think the second which has changed now, which of course I'm digressing from the point you made, is, see, people find the whole act of, digging in your pocket, taking out credit card and trying to swipe the machine, and plus the machine has to be available, has been eliminated by and large. Today, if you have a UPI, use mobile and and you do it, the act of payment is much easier. So some people prefer that, and some people are one who just need more money, right? In my case, when I have to assess many factors which go into it, number one factor is going to, are you an earning guy or not? What is your income level, right? Because in your case, the issue was one of forgetfulness and not this thing. But otherwise, the big issue is whether this guy has a repayment capability. If the repayment capability, in fact, people like you are good customers. People who forget, we are all happy to take those customers, right?
You'll pay more later on. Yeah,
you'll pay more, and I don't need to worry about my collection. I know by and large, and he has good income. For him, this is like a puny amount compared to the income that he makes, and so on and so forth. But assessing the income level is rather critical. Then, is there any fraud intent? Unfortunately, this is an industry, as much as there are many fintechs which have mushroomed, a set of people who are capable of doing all level of charlatanism and frauds. They have mushroomed like anything. So there is this element of, models are run in such a manner where, you have to decide whether this customer is the right customer or not. See, words like AI and ML, I understand, has got cheapened with overusage. But this is one place where data and ML can make a world of difference in identifying the 70-year-old guy who follows a very different rhythm versus somebody who is a new age guy. Like a lot of students who come in, they don't intend to default. So the behavior of the students is they will take the money, they'll pay after 1 year, 2 years. They're not bad credit at all. At the same time, there are one other, I know it's a very industry specific myth, but let me just lay out. One of the conventional wisdom in the market is a salaried customer is a good customer. A self-employed is not so good one.
Correct.
Sounds very intuitive also. If you are dealing with a bank, the reason you got a credit card from McKinsey very easily, not when nobody came to this thing, because you were a salaried customer in a top A-graded company and people knew that salaries are great, so they can immediately give you. If you're a self-employed, the general feeling is, no, you're a bad credit, right? You're a bad credit, you have to assess many things, etc., etc. In my portfolio, cut any sliver, any geography, anywhere, any time of this thing, self-employed has always performed better than salaried. It has my head scratching many, many times, always. And I've tried answering this, why that is the case. And just to make the distinction, a self-employed guy is the one who is running a business, who is a gig worker, who doesn't have a monthly earning, right? He can be a small business, he can be anything. The only thing I could make out of this is, number one, if there is somebody who is truly salaried, he's not going to come to me. So there is a slight bit of adverse selection happening. A slight, risky guys come to me, which I get it. But a self-employed guy who is otherwise not being served by banks, institutions, etc., they always, not only they come, they show a loyalty and a stickiness which is unparalleled, unimaginable.
Underserved from the
hugely underserved. I think the point I'm making is banks, traditional institutions, they have been rather, I would say, tentative and timid when it comes to using data. And I think some of the fintechs, including us, we were one of the pioneers. We could do that not only early on, but also at a scale. And that has made the difference for us to get more customers, serve them, and so on and so forth.
Understood. So, 11 million consumers today, what does the business look like? So, this is a lending business. What is top line, bottom line, number of people? What do your customer cohorts look like?
So, I have 11 million customers. When I say 11 million customers, these are not customers who have downloaded my app or got a limit. These are people who have taken loan from me. Either they have paid back the loan or they are duty bound to pay back.
Okay.
Right. So, these are real as it could be. At any point in time, 30% are active.
Okay.
Which is because active borrowing. They have an outstanding with me. If I take a 3 months and a 6 months vintage, the same 30 becomes like 40, 45. So that's a thing which happens. In terms of the scale, my book size is basically a measure of which is the outstanding AUM, is close to around 3,400 odd crore.
Wow.
And the profit numbers or the ROA, which is my PBT is around 300 odd crore. So the PAT becomes like 220 odd crore odd or so.
So a PAT of 200 crores on a 3,400 crore outstanding lending.
220 odd crore, is what we...
For FY24 or so.
FY24, the year which ended, which is the March, this thing.
Well done, Ranveer.
No, thanks.
Well done.
It has gone through many, this thing, but those are the...
It's surprising because 3,400 crores lent out for 1.1 crore customers is like, you're right, 3,000 to 4,000 rupees.
Maybe so at any point in time,
12,000.
12,000. And it's a little bit of a heterogeneous thing. What happens is 34,000 by 11 million, you're talking about like 3,400. You take the activity ratio, it becomes like 12,000, 13,000. At 12,000, 13,000 also there are, so I have 3 distinct products.
Okay.
One is what we call as a limit product. Limit product is what I was explaining you. You walk into the store, you get it, and that becomes the start of the relationship. Where the ticket sizes are as low as the average is around 13,000. Starts at 10,000, goes on till 25,000, 30,000. I have something called medium-term loan, which is between 3 to 6 months, where the ticket sizes are almost like 40 to 43,000. And then I have long-term loan, which are EMI-based loan, where it goes from 6 months to 36 months I give loan, where the ticket size is 1.5 lakh.
Okay.
And the 3,000, 200 crore, 400 crore, which I'm talking about, almost 70% is from long term. Because they are higher ticket size, they remain in the book for longer, so that also plays into this thing. But in terms of number of customers, perhaps 30% are the long-term customers. So
understood. But they account for 70% of.
They're 70% of this thing. Yeah.
And these 1.1 crore people what are they borrowing for? You're saying 1% is consumer durable finance. What is the other 99%?
They borrow for 4 things, primarily. So when I say 1% consumer durable, I was talking about at the store 1%. They still borrow for some purchase which are linked to consumer durable, but 1% are the one where I go to the store and finance them. They borrow primarily for 4 reasons.
Okay.
Number 1, there are a set of customers who have a lot of recurring needs. They borrow like every 3 months, 6 months. They are primarily, 80% of them are small business, self-employed customers. And the recurring needs is almost like 40% of my needs. Who are these customers? If you have this tempo which is going on, abhi main aa raha tha, fir bhi tempo dekh rahe the. So this tempo basically go and give material to the shopkeeper. The shopkeeper always has this dichotomy, should I take 1 lakh ka amount, or 1,20,000 ka, or 1,50,000 ka, but for that 50,000 we fund it. But he has to do it every now and then. So that's one recurring need. It can be a recurring need for a salaried guy also, because usko rent pay karna padta hai har month, and so anyway, that's the first thing. There's another 30% which is for some purchase of product or services. When I say product or services, the product can be a consumer durable. The services can be travel, leisure. It could be some other product also for his kids. Product and services, which is 40 plus 30, 70. The remaining 30% is half and half. Half is some emergency need.
Medical types.
Medical is one. He has to pay school fees. He has to immediately make some payment, etc., etc. He do it. The last 10-12% is almost he has to transfer the money to somebody. Some family member, he has taken the loan and he's paying back. We never get to know the end use, to be very frank. I mean, we capture it, the stated end use is I want to use it for some purchase or some payment, etc., etc. But they are usually to some vendor or something which can be call it part of their monthly expenses that they're paying.
Understood. Something for the viewers to understand here, I think, and this is from years and years of understanding businesses, distilling experiences and articulating it. Something you learn, of course, in your workplace. Consulting is a great place to do, but wherever you are. But then running a business for a long time is understanding the core of the business in a very simple way. So if you hear Ranveer talk about his business, you know that he has a lending book of 3,400 crores across 1.1 crore consumers at an activity such as 3,400 rupees average for consumer, but only let's say 25% of them are active, is 12 to 13,000 rupees. And then there are 3 kinds of products, from short term, medium term to long term. How much of the customer sits in what part? And then, by the way, the 4 reasons why they're borrowing the money. This is something he makes it easy to understand now, but when you're running a large business with constant activity, to crystallize and to step back and understand the business in a most simplest way is a critical skill that most entrepreneurs need to learn, and this is something that I'm learning from you live. So, okay, I understood. So the other 4 reasons, how do people discover you? Okay, how do people discover? So one is, of course, in the store, but in the store must be one of many ways in which these 4 kinds of products are being sold.
Yeah. So all my customer acquisition, right? I acquire close to around 7,000-8,000 customers every day, around 3 million customers in a year. There are 3 ways primarily. Number 1, like many other people, I do digital marketing. So people, get to know me on Google, Facebook, bunch of other this thing. That contributes to almost around 30-35% of my acquisition.
Okay.
50% happens through these merchants. I have online merchants as well, but online merchants share is rather this thing one. I have close to around 300,000 merchants. They're put in specific places which are more credit. This is not as ubiquitous as the normal, the black and white QR code. That contributes to 50% of my. And the remaining last 15% is some combination of partnerships I've had with many aggregators, big aggregators, small aggregator, all combined together.
But 40% of your customers are, recurring needs business people. Someone like a cement dealer or a tempo person, or maybe a pharmacist. But they're not getting in touch with your funnel either on digital or at a merchant, right? They're how are they coming into your?
Yeah. So the way it, again, the maths is slightly different here. What happens is, when I acquire a customer, they may have gotten into because they would have bought something, and they may have a limit of a higher, whatever, need for a higher limit of say 20,000, as I mentioned. Almost 70% of them repeat with me. So after 45 days, they come and repeat. They repeat for different needs, different reasons. And then after that, after first cycle I'm talking about, cycle number 0, cycle 1, 70% repeat. After that, it is such a certain business that almost 82% of the people, you can almost run the geometric progression formula that so many people will take loan from you. Now, at any point in time, 9-10% of my customers are new customers. 91% are repeat customers.
That's amazing, right?
So, the other, myth which exists in this business, just because you're doing short term, you're always on a treadmill. Of course, one is in a treadmill, right? Because you have to work. But what is missed out is that the same customer, they actually come and repeat. 90% of my business has no treadmill involved. I mean, they just come and repeat. Of course, you have to do many things to ensure they remain sticky with you, etc., etc. So what happens is, once you have this 90 and 10, what I'm talking about at an overall 100% level, not only at a 10% level, where when they repeat, they will be using it for purchases for, as I said, product and services purchase. They will be using it for emergency need, event-based need, and so on and so forth. So that defines the full this thing.
Understood. I think this is mostly an app, or is like you have a call center, you have a physical sales?
100% app. No. So we have a sales people who go and put the QR code. They
But
never
no
interact.
shops, etc. No physical shops where you have like a kish set up like.
No, not at all. Not at all. So that's the, very rarely I've seen magic happening in India. But if you ask me, the whole act of, because it was completely unimaginable when we were starting. I have, as I said, the only customer, the face I remember is the first customer. And for this set of customers, I've never interacted with anybody. Nobody has interacted. We don't, of course, we talk to them more to understand, keep understanding. You have to just understand what the pulse is, what they want, etc., etc., but not a single interaction with any of them. So, they're only on app.
That is such a counterintuitive thing, because you're saying 90%. So, you started off by saying customer obsession. But customer obsession, in your view, is understanding the need of the consumer and solving for that in the most simplest, frictionless way. It does not mean genuinely like pandering to the consumer or getting to know the consumer beyond this. It is actually very specific, right? And then you are saying that 90% of your business comes from sticky repeats, which probably comes from understanding the consumer and delivering products that they want when they want it, on time, at the best rate. And that is what is actually creating a business. But there is no, in India में वही बोलते हैं ना कि a lot of businesses relationship driven, even banking. The reason why people go to banks, and it's like for a lot of older people, it's
there's a different connect.
You have a face, there's a relationship manager, there's someone you can talk to, you sit down, you have a cup of tea.
Yeah.
And that relationship leads to a sale of products, you can deposit money with them, take a loan, etc., right? Insurance, etc. But in your case, you're saying customer obsession extreme, high stickiness, but completely digitized.
So
how do you reconcile this?
Yeah,
it's very interesting though.
Yeah, let me just remind. When we acquire a customer, of course we know our segment, we know their affinities, we know their wants, needs, etc., etc. One can be very complex about it, or one can just say, let's make it very simple. What are they looking for, right? A new customer, what is it looking for, right? Transparency as regards pricing, simple and uncomplicated as regards process, and why being scrupulous while delivering customer service. Very, very simple need. And while we are delivering it, in the first instance, we want to give the loan in, say, 3 to 4 minutes. That becomes the start of the relationship. Once they are with us, there is a lot of segmentation which goes to understand what customers are wanting for. And one learning I have had, couple of things. First of all, when you're serving over 10 million customers, you learn to trust your gut, right? You know who you are dealing with. Second, there is no heterogeneous, it's a very heterogeneous group of people. There is no single thing which is true for all. Let me lay out some segment just to give a flavor of the customer. There is one, again, very hidebound view in the market that people only want pricing. Of course, they want pricing benefit, right? If somebody is offering a 22% versus somebody is offering a 20%, people will point toward 20% because, as you said, this is not a relationship oriented. The interaction is only on mobile, etc., etc. My sense in our case, wholly mythological. They don't want pricing. In fact, it's too much strain on customers' brain to calculate the IRR of 22%, 20%, and the processing fee and ticket size. And they want amount which serves their need. And of course, it should not be high cost. It should be a reasonable cost. They can immediately calculate. They can't calculate IRR, but they can easily calculate ki if I have taken $100, I'm paying 105. In other case, I'm paying 107. Okay, so this one is better. So that's one. I mean, people have an untrained instinct for pricing, I would say, and you have to cater to that.
I love the word, untrained instinct for pricing. Okay.
Yeah. So they basically are always, that's one segment. There's another segment, and I would humbly agree, I was completely exposed to. I never thought such a segment will exist. There are a set of people, and I would give anything to understand that phenomenon. They have a pathological craving for rewards. You give them rewards, they will, everything else is secondary. You can, I don't intend to, give something from one pocket and take double from the other pocket. Don't get me wrong. But good 12, 13%. They are always looking for the best deal on rewards and additional bells and whistles. I have not understood why, but people do it. And now I'm a transformed man. Today, when people talk about, this should be there or that should be there, I said, no, you have to create this as well, right? Similarly, there are other, finer segments like, as I said, the shopkeeper example I gave. They want a limit type of a thing. They understand their business. The money will get used mostly for business purposes. They know business goes through sinusoidalness and seesawing. Sometime Diwali aayega, us samay unko limit chahiye hoga. So the availability of credit as against usage of credit is more important for them. Available right credit.
That's so interesting. Availability of credit versus usage. So you're just saying the psychological की है.
Comfort है. Comfort है और जब comfort है वो ऐसा कोई not with statistical probability and with this thing uncertainty. No. One click away, it is available. Big value. I'm sure you and I get into that situation, we value that, right? So I'm saying different people have different. Then I have this class of people, right, who I always feel, mostly when we talk to investors and in the confines of conference room, people always talk about, no, the banks will take your customer because they are lower pricing. Of course, we also done and implement on it. So there are customers who started with me, right? But they are not good enough. Very, very good CIBIL score. How do I ensure for these customers, my offering are always, I'm on toes. I'm reducing my pricing, increasing my ticket size, giving them the best offering, so on and so forth. So there is that pool of customers as well, where a lot of, analytics which go behind it, which is to really identify what is the price propensity of a customer.
Price propensity of a
customer. What does price, so many times, people have this thing, I want things only at 12%. I don't give any, there are a set of people, I don't want any convenience and bells and whistles and rewards points and etc. etc. I want only convenience. The pricing. They're very good customers, right? They are, now for those customers, there are a set of behavior you can check on data. They never default on anything, always paid on time, never, always this thing, always got the best deal on pricing, etc. etc. I lower the pricing for them, for that set of people. I think the other thing in lending business, I personally feel, the vast possibilities of data has not been fully explored. We are still, shallow water greatness we are running with, if you understand what I'm saying. There's enough and more thing to be done just to understand what the customer is asking. And not by physical interaction. Of course, physical interaction adds another flavor, but just by looking at the data. It's a long way to go. So
that's amazing. But I'm going to ask you a very layperson question, okay? Is you've lent out 3,400 crore rupees. Right. That's how much money you have floating.
Which is the outstanding, right? I've lent out more.
Current outstanding is 3,400 crore. People owe you 3,400 crore rupees, right? Two questions. One, all the data, the analytics and the stickiness and all is fine, but given COVID was a once in a century event, do you sometimes feel that what if Kish is the place where there could be an event where just there are far higher non-performance of return compared to anywhere else. Does that give you sleepless nights? Number one. Number two, very honestly, how do you think of starting a lending business at scale where you've spoken about multiple times? So there is a capital moat in terms of what limitation on scale you can get to. How do you kind of access capital? Do you borrow it? Do you raise it? Do you do combination? What's the right? Ashish Mohapatra has spoken about it on the podcast also multiple times, but I would love to know how you think about just creating that lending book and creating the capital to give out.
So on the first point, do I live with a fear of things going bad on the Kisht book, etc., after having seen, wave 1 and wave 2? The answer is resounding no. Because I have seen wave 1 and wave 2, I think, and this is not some bravado answer, I mean, don't get me wrong, we understand what are the issues in our business. We understand, like any other business, right? Many, many issues that you have to solve for. But is there a fear that risk will go significantly higher in this event? Of course, it is a function of what is the event we are talking about. See, one of the things which has happened, there is a great deal of comfort we have on the statistical probability that we attach.
Okay.
And it is not coming from, you are as good as your ability to see large number of customers and having seen business cycles in the past. And talk about business cycle, we have seen one of the most monumental of cycles, wave 1 and wave 2, and come out unscathed, etc., etc.
Then wars and all that. Last 4-5 years have been crazy.
Last 4-5 years has his own sense of this thing. And then there are many other layers which are put in, right? We understand this is only one part, which is still talking about macro. But the micro can be very different. When I say micro can be very different, ultimately it gets to individual. Whether Ranveer Singh will default or not. He has good job. He has a good cushion on this thing. He has shown a willingness, intent of paying always. What are the chances he will default? The chances are very, very low. Then there is another set of mitigant which is there. There are some forces which are more countervailing to each other, that I'm doing short term, I'm doing long term. Short term में पैसा तुरंत आ जाता है, long term में अटका रहता है, right? So combination of all that. So the chances of that happening, of course, when we model scenario, we always say that the risk can go up. In that scenario, our ROAs will be so much, etc., etc. But I find it very, very difficult, almost impossible to believe that such a thing will happen. Even a black swan event will not lead to, fine, the profitability will be negative, the risk will go from 3% to something like, say, even 10%. We are still sorted, right? That's on the this part. On the part around capital, I think my only advice to a budding entrepreneur, right? Don't see that as a constraint. Perhaps there is a little bit of faint psychological, urge driven here when I'm saying this. Maybe I've gotten old. If I was starting, I would not worry about that at all, because we see those constraints as constraints, but in reality, those are not constraints. Those are not constraints. Simple we used to do in McKinsey, right? Where does the value lies? There are enough and more capital, debt capital I'm talking about, not the equity capital, debt capital chasing good customers, right? If you are able to acquire good customers, then enough and more debt capital will be available for you. When you begin, the way the market works, it may not be available at a good cost of fund. It may not be available at 9%, may be available at 15%. Of course, it will come down. The question to ask, the technical part, at 15%, can you serve the customer? My sense is, of course, you can serve the customer. And it's a testament to, I know we say this cliched thing, Indian market is underpenetrated, as I said. Of course, there is a market out there. And over time, you don't have to build those capital. My book also, the 3,400, 60% of them is, I don't do it on my balance sheet. I use other people's balance sheet. Of course, my cost of fund is higher, which is the point. And it will take some time, because that's how the financial services has worked in the past, that you have to be, scale will define your, and this 3,400 is still a very small scale, right, compared to the bigger players and many other things to be done. So this thing would be, of course, this is an important one, but that should not come in the way as a deterrent in trying to build something on financial services. If anything, as I said, the data part, there is many things to happen. Many, I would say, new frontiers would be mapped, trails would be blazed, or whatever you call it. But yeah, there is a big opportunity out there.
I want to actually come to a very specific thing on lending. Very India-specific thing, maybe because consumers are gratification of payment of UPI on, like with a single click, right? Borrowing with a single click. There are a lot of companies that make borrowing easy, right? Getting used to e-commerce where you're always paying through EMIs now. Do you think the borrowing propensity has gone up?
Yes.
And do you think the borrowing propensity over a period of time will create a pressure on incomes that may not be rising at the same rate?
Yes. So first of all,
like I always feel, maybe it's age. I've become a little older, and I always look at younger people in terms of borrowing and YOLO and all of that. But I always think the consequences are a lot more real. Or I just like quantify that for me a little bit. Yeah.
I think 7-8 months back, our governor came as part of his monetary review pronouncements. He said there is over leverage building up. Of course, RBI has seen the data, and then they are, as a practitioners, I can tell you, from the last 18-24 months, there is a decent over leverage building up.
Like say that, over leverage building up where?
Over leverage, and that to define for everybody in a very simple way. Over leverage means just the number of loans taken by per customer. Just a simple definition. Very, very
retail.
Retail number of loans. पहले मैं 3 लोन लेता था, अभी 5 लोन ले रहा हूँ. And the more technical definition, which is my debt repayment as a proportion of my disposable income has gone up, and hence I'm over leveraged, right? So that's the. There is a good, I would say, 8 to 12% of the customer where there are good evidence. I mean, the evidence is so evident that you cannot not say that there's no over leverage happening. There's an over leverage happening, driven by many factors. Some supply side people the credit is available, and the ease of use and the mindset issue that you're talking about to a young guy, he can easily, that is there. Is it true for the entire economy? I don't think so. I think the biggest mistake one would do is to have a broad brushstroke and say, no, it is the same for everything. Not at all. By any standard, by any banal, tried metric, we are very, very low on credit. People need more. As much as I have not interacted with a large set of customers because most of them are digital, but I know a credit makes a world of difference in their business growth, in their own ability to enjoy the moment for the purchases that one was talking about. So I would say in some section, of course, there is an over leverage, but by and large, for the mass of humanity, as far as India is concerned, there is a big, big latitude, wriggle room to grow as far as leverage is there, the credit is there.
So you're saying that it's true for a certain
section of people,
but not for everyone else.
Not at all. Not at all. And the last thing one should do is do it as treat them as one cohort. Not at all.
Understood. I think credit is like, if you are able to borrow cheap, invest capital, or create experiences, assets, whatever you want, whether it's real estate, whether it's something for your business, you're able to create a lot more value than the interest you will pay. And that's the way business is. That's the way I would think about.
Oh, absolutely.
Right?
That's the right way.
I borrow at X, and then I'm able to create at Y, and Y minus X is for me, and credit helps me create Y minus X. But at a retail level where it is cost, where you're funding cost and not necessarily investment, it becomes difficult. I've seen like a lot of people where the salary then goes into just paying bill A, B, C, D, E, F, and then there's very little. And then at the same time, you have a large number of Demat accounts opening up and mutual fund investments. Yeah. So where is that cushion? Is that cushion reducing, increasing?
Yeah.
I'm not sure. Or is it for a certain set of people where incomes have actually reached a certain high point? Like other day, I saw a very scary graph. I'll actually show it to you. Let me show you this graph. And we'll show it to the viewers also. Came on the IIM Lucknow alumni group actually. Look at this. Look at this image.
Okay, 1 moment. Makeshift froze. Oh. Wow.
Right? So this is a reflection of and I would love to see this weighted to income. Sorry, coming back.
No, I was talking about this over leverage. Yeah. This is very telling, needless to say. See, my sense is as follows. How best to put it? You and I may know friends in US. They come from same background, IIM types. When you talk about the lifestyle, some of them, not all, they have a similar this thing. That itna money aata hai, isme jata hai, isme jata hai, isme jata hai, and many other people who do that. And it has always amazed me that is it so cut to cut, right?
Yeah.
Right, so cut to cut. My sense is in India for a puny fraction of people, that cut to cut definitely exists. The principles of lending are very simple, which you already outlined. If I am borrowing $100 and paying 10 on that, I should better be using it for something which is generating more than 10.
Correct.
Right? If I am doing that, it is a great benefit for me, right? Because I would not have 100 available, and suppose I'm making 20, the remaining 10 I'm pocketing and I'm making rolling, and I'm growing, and all of a sudden I get to a next level. Very, very clear. If I'm somebody who is buying for consumption purposes, then my income level should better be increasing, or I should have enough and more latitude or leeway for me to still pay in case the income levels don't go to the same level as what the interest and that this thing are there. And it's a question to be asked. When it comes to consumption, whether people are getting the maths of what they are paying versus what the income level will be there in future for store is somewhere getting mixed up. My own sense is it is definitely not happening for 10% of the people where the over leverage is kicking in. But for larger people, by and large, this graph that you showed is also indicative of a different phenomenon altogether. One can say not to deal with over leverage. The careers are getting shortened now.
Correct.
They are no longer, your and my parents who stayed till 60 and then did many other things, etc., etc. Today, I think there is a good kink or rather inflection point happening the moment you reach 40, 45. You have to think of next gig. I think it's also a factor of that beyond just the over leverage.
How dangerous is that though? Think about it.
Yeah.
Think about people in their 40s where, and this graph, like one of my friends outlined it beautifully. He said at 40, 45 is when you're at your financially most vulnerable, because your children will probably have the largest thing. You will
a lot of committed expenses.
Yeah, you probably have bought your biggest home. You probably have parents who will need you. So at 40, 45 is when you're at your financially most vulnerable, maximum amount of, kind of servicing costs for you. And if at that point your income becomes muted or disappears, or you have to kind of go into retirement and think about maybe starting up or whatever, you are not in any way. So in that case, over leverage for a sample set of one becomes very dangerous, right?
No, it is. It is dangerous for that segment, but I would also say there's a little bit of saying for those 45 years, and in that segment, there are a set of people who are over leveraged. See, I'm a believer, a subject is worth a digression perhaps. I'm a believer that free market has to operate, right? Which what I mean by that is, see, take out the over leverage equation for a moment, just take that out, right? The changes that you are talking about is so fundamental. It is changing societies. It is changing, somebody is changing the whole notion of specialization. I did this, 40 years, I did everything, all of a sudden, and some people are comfortable, right? In McKinsey, it almost became like a norm, but many people are not. I think that change for me is a much, much bigger change. Within that, of course, if you add over leverage, there are a set of people who get impacted. And as they say I don't know who said this in America, that there's always a second act. So I'm sure here also there's a second act for people. Yeah.
But that's the thing, because again, narratives are very counterintuitive. On one side, you're saying lifespan are increasing.
Yeah.
So people above the age of 60, earlier lifespans were lower. 60, you retire, you have 8-10 years of retired life. Mostly people in their 60s, 20 years back would look a lot older.
Yeah.
You see people in their 60s today because of nutrition, availability of medicines, just general evolution, your lifespan is increased, but your working lifespan may be reducing. And you are vulnerable. So now you're right, second act is important, but I don't know socially what happens, and we're seeing it play out in Europe, Japan, etc. Where it becomes a significant burden on people to kind of almost live extra becomes burdensome in multiple ways.
Yeah. No, you're right. Not to comment in any frivolous manner. Somebody was saying life is short, and the response to that was, but life is long too. right? Which is very true. Life is long. You're right. No, I think I concede such a life. But more than that, it's a big social change, I believe. Big social change. And when you are into this quandary where the income levels are not high, you are not saying what the next gig is going to be. Things like mental and other related things is only going to come in. So those are other connotations which one will have to take care. But yeah, those are real issues one will have to think.
But stickiness of credit is actually I feel is a dangerous thing. I'm not like if you don't know how to use credit as a tool and you use it as a sustenance for too long, then stickiness of credit could be dangerous. Like I've seen people kind of not misuse it for the lender, but more for their own financial health, and they kind of end up in a hole they're not able to pay. Like you can't dig yourself out of a hole which is built by credit by borrowing more. You can't. That's a dangerous place.
I can't agree more. I think just being responsible on what you borrow is very critical, and I think it's a little bit of responsibility with lies both ends. I know we are talking only about the 1%, but that 1% is a rather important 1%. Even companies like us, it is important that we are not fueling any kind of over leverage, right? Which might make the person get into a situation which what one would not have wanted to be. So no, I can't agree more. I mean, one of the things we did almost 18 months back, which was not an easy thing to do. When we start seeing this over leverage on the definition, which I was talking about, number of loans, we just took a diktat. We are going to cut almost 3 to 4% customer every month. Now, 3 to 4 may seem like a very tiny number, but in my case, because there's a compounding, it almost becomes a rather big number.
Yeah. It's like cutting the business from the legs,
Cutting the business, amputating it, if not mutilating it completely. So, the impact of that was, of course, we did it as a way to mitigate the risk, because we are starting seeing risk. It's one thing to, of course, they get into a debt trap, but quite another to also say, oh no, this risk is not good enough. I mean, one reason among many which has kept us in good stead is that call we had taken, and it was not an easy call, because at the end of the day, these are probabilistic, right? I cut the 3%, but I realized 2% of them were like very good customers.
Yeah.
The data was inadequate for us to judge over level, one way or the other. But fine, you have to somewhere, do this. And in retrospect, when we said, okay, some part was good call, some part was bad call, but we lived with that. But it did make a big difference in the way our risk have panned out, and at least in future it will.
That's amazing. Before we move towards your entrepreneurial journey, one is of course dissecting the business the way you have, and I think it's amazing to see how, like I always found lending businesses to be difficult to understand, because my DNA is like I never did financial services. I don't use financial services as a consumer much. Like I don't know. I have never till date checked my American Express credit card statement ki jo minimum due and jo amount due hai, does it match my expenses till date?
Yeah.
I have not ever checked that, right? Yeah. I don't like, I find making bank transfers tedious because ad beneficiary is a huge issue for me.
I can imagine.
So I still use checkbooks.
I can't believe that. Are you a checkbook user?
Oh yeah. My assistant has 10 signed checks.
Oh man, now you are truly an antiquarian old age guy. You have to be put into some kind of.
But HDFC Bank, I can't do more than 50,000 rupees in the first day or two, or maybe there is some other way to do it.
I know. You always. I understand what you're talking about.
So कैसे दूँ मैं? I have to give you 2 lakh rupees. I can't do it.
But yeah, they say you have to do it once so that you can do it later.
So for me, this has been an education. Yeah. I knew coming into this conversation that it would be because of the depth of experience you have. But before we move towards what entrepreneurship has meant for you, and what an IPO means, and what you and Krishna have achieved with your teams, and I would love to talk about Ring and Kist separately as well. But before that, just on the industry of lending, you speak about a lot, and I see a lot of fintech young entrepreneurs, experienced bankers coming in. Like Cred found its own way to kind of to lend money. But who are the companies and the founders and the thought processes or business model that you look up to and say this they've done? Or even Ashish Mohapatra, for example, he worked closely in McKinsey, but he's done it in a different way. Would love to understand that.
Sir, I'll tell you, along the way, many people. There's no one single role model. We have always learned from, I remember between when we started 7 years back versus now, if there was a league table of top 5 players, or rather top 3, top 5 for example, that top 5 league table every year if you draw, in 7 years, this should have been almost 5 and maybe 2 or 3 drop that would have happened. I think the number is we are talking about around 20-25 players who have appeared, who have gone up, gone down. There was some company at one point in time, some other company at different point in time. And I'm not saying to say that this is of course, till today also, despite all this, I think the league table is a rather changing one. But I genuinely have learned quite a bit from either our competitors or some of the traditional players. And they all, including us, have got a particular niche, and they are excelling in that niche. Is there one single company which just encapsulate everything? I don't think so. It doesn't come to me. But it's also a testament to the deep market which is there, right? There's not like one product, one this thing. There are many frontiers which have been completely uncovered, where maybe none of us are present. There are many use cases which have not been catered to, because it's impossible to do that. For example, I'm trying to build a secured book. It's not easy, because one, it is not digital. Because the whole act of collateralization makes it non-digital. You have to go to the registrar office, you have to get it signed, you have to create an equitable mortgage and say, now this property is under my name, right? So I'm saying there are these challenges, but I'm sure over time they will go away. But if you ask me any one single company, that difficult to single out, but there are many players I'm a big in awe of.
Understood. Coming to entrepreneurship, and I know it's a slight shift in but talk about what the last 9 years have been for you. And it's interesting because I don't know the consulting gig lasted that long. I thought it started much earlier, but 3-4 years of being in services, then in financial products, which are actually like the layer at the core of service business. Talk about what that journey is like. What does entrepreneurship mean to you in terms of creating value, creating your dent in the universe?
So I would say, first of all, as I was telling you, I never became an entrepreneur because I just had an epiphany that, here is the thing I need to solve for, etc., etc. For me, it was an extension of what I was doing before. But while doing that, I just wanted to enjoy the problem solving, work on something which may have a far-reaching impact. I can tell you, never in my dreams I would have thought we could get to, not so much on the 3,400, 11 million people and many other things, right? So the initial this thing was just to get into something where the chances of creating impact are rather massive, right? That's what many learnings during the way. I think one thing I've realized being an entrepreneur, I think the biggest quality I value, being a good loser. Just being a good loser.
Be a good loser.
Being a good loser. Absolutely. Of the many things that we try, of course some are blockbusters, some are not. But to learn from them, which is the traits of being a good loser, and just pledge ourselves, no, here are the learnings, what we don't need to do, this we need to do. And this, the other thing of keeping your head over your shoulder and always, so I think there's one quality which I think has really made me, any entrepreneur, one should basically have that, I would say. And I think the second one, you have to be courageous. You have to be ready to put your flagpole when required. And courage not defined in some very arcane manner. It's just defined in simple, not let your actions driven by your insecurities or the fear or some other thing that you're seeing, very objectively assess and be able to take a call. Because when I evaluate my 7-year journey, the time after time it has happened. Moment after moment it has happened when we had to take some call.
Give me examples.
Like, during COVID time. I remember March 23rd, when we did our last loan, 2020, just at the doorstep of, COVID coming. We never understood lockdown will be so much. Every week, and then every day and every hour we are saying, they have discontinued business. And we said, no, it doesn't make sense. This is not going to, we're just taking a call. Perhaps because we discontinued 4 days later, we did incur good losses if we had discontinued 4 days before, etc., etc. And then what started was, there was a time when the general public opinion within the company was, oh no, we should not start. There's too much of this thing. Everything is locked down, etc., etc. We took a call, no, we'll start. I would not say I had some magical insight. I mean, when you're in a situation like this, you have to commit to some kind of a hypothesis. We also committed to one, which is saying, if we do this set of people, we may. Because the other, thing about lending business is, you can't let the capital hang around, right? And it does have its own implications. Customers, you can still get them back.
Stop paying you for something.
So, customers, the bounce rates has gone to a different level, unimaginably high level. But of course, in retrospect, when I think of it, the recovery was equally good, if not better, etc., etc. We know it's a normal. But in that period of doom and gloom, the drop that we saw was massive. So, in our business, when I give a loan, almost 86-87% people, they gave on time without any nudge, any provocation, anything, nothing.
Correct.
That 86 that time has gone down to 42-43.
What are you saying?
And if you understand the way maths work, 86 going to 42-43 is not only I lose my pant shirt, but I don't know what I lose more, right?
86 to 82 would have been a huge, would be on...
86 to 82 is huge, but that delta 4 over a period of 90, which comes down to delta 1. 1%, 5%, we can easily absorb, right? If the 86 goes to, I would say 70 also, or 66 also, fine, bad year, no profit. Yeah. So that was the number we went to. Of course, we have seen the losses. But now there's a discussion around, we have to resurrect the business. And that time it was not resurrection. What was going in our mind is we have to start. We have to get. So whole thing happened of, taking out a set of people, getting into doing this, and etc., etc. So that's one instance which comes to mind, talking about, calls. And similarly, there are many other things, right? We have identified our niche on consumer durable financing. I know some of the challenges we were facing, some of the excitements we had, but to take a call saying, oh no, we are going to invest in building a network. Of course, part of the conviction come from we ran pilot, we learned from it, etc., etc. But to put the full organizational energy on something where it was only a set of theoretical concepts which you believed in, and then invested and built it. I think some of those things we could not have taken if we were
not courageous
or not had the intent to take courage and ready to lose also. So those are some of the things which
and compared to consulting, where of course it's about client service business, rigorous problem solving of course is there, but accountability is obviously a lot lower, and entrepreneurial outcome, consequence management, etc. is very different compared to like any job actually. Was that switch difficult for you, different for you? Now you're operating like obviously like 1.1 million customers and lots of money, so there's obviously like crazy amount of accountability. But
no, so the good thing was it happened more gradually. Of course, there are points in between when it was rather sudden. It was not easy at all, because I think one other thing I learned in the process, it's quite easy to add to your knowledge at will. Very difficult to subtract from your knowledge. And so I know we call it unlearn and all that. And so this whole, because as much as we said we learned all those things in the McKinsey days, but we were very unilateral way of thinking.
Correct.
Right. So it was not easy. But I think the act of being a fast learner, trying to grasp the place, being a good listener, right? For example, one of the things for me was just empower everybody. Don't keep it to you. just let people take any and everything. I know we used to have this word obligation to dissent, right? People should have an independent point of view and all of that is one thing. But just let people give, so that when I'm solving a problem, it's not my problem, their problem also. And I think the other thing which I learned, which was rather strikingly different, which just still stirs my mind in many instances, just trust on people's capability. Just trust. You give them a pedestal. I'm again, as much as I'm gullible in buying book, I'm gullible in trusting on people's capability as well. You just trust them, give them a pedestal, give them a platform, and let them go out and perform. They actually do wonders. At least I would say for somebody like us, it's purely a function of people around us who have been able to deliver. Some really, really great guys.
Sometimes assumptions work. कि ठीक है कि रेजर बेचना है तो ऑफलाइन बनाना पड़ेगा, ऑनलाइन लोग कम खरीदते हैं. And sometimes there are macro trends, like quick commerce, for example, is becoming huge for us. And Blinkit, Instamart, Zepto are now becoming big partners. They were earlier 4% of our business, now 9% of our business. And if they continue to grow, Razor sales, we can actually go there without the physical and financial burden of building as big a distribution with Gillette and Colgate and HUL have built for decades. Now the counter is the trimmer market sits fundamentally online. Amazon, Flipkart, etc. is where most people buy trimmers. आपको अगर ट्रिमर खरीदना है पहले ऑनलाइन देखते हो उसको. Now the reason for that, I thought that it was a consumer answer. ऐसा क्यों है? क्योंकि consumer सर्च कर रहा है. But I realized it's actually a supply answer, which is people who sell trimmers are electronics companies. It's not FMCG companies. So it's Philips, Havells, Braun, Syska, all of these guys. Their offline businesses are the consumer durable stores where trimmers are not bought. So they're like, वहाँ पे तो कहाँ कैसे बेचेंगे, तो ये प्रोडक्ट है तो इसको ऑनलाइन बेचो. And the consumer has followed the supply. But you know the interesting part? The interesting part is trimmer is a category where a consumer is visually identifiable. So I can look at the consumer from far. I can say दाढ़ी है, trimmer use करेगा. Which is not the case in any other category. Like you cannot make out whether this is a person I can give credit to or not. Or can I sell Head and Shoulder shampoo, or can I sell Parachute oil, or can I sell...
No, I understand with trimmer.
Trimmer I can make out. I see a bald guy, head shaver. I see a beard guy, I say trimmer. So, and now my trimmer is worth on average 1500 rupees. My razor is worth 100 rupees. So one trimmer is 15x the revenue and 20x the profit of a razor. And the assumption that trimmer is an offline market, online market, is flawed. I can actually build out stores like the T2 airport in Mumbai where people can say.
No, quite something. Being able to draw those insights and then translate that into action and reality and people doing it, oh, that's a kick.
So now, like within this year, I'm here, like everyone in the company, like if you're flying from Bombay, go to the, exclusive outlet of ours. It's literally a shelf. Ranveer is a shelf. ऐसे भी नहीं कि दुकान लेके रखी वहाँ पे इन्वेंट्री. एक शेल्फ है लाउंज के बाजू में, उसके आजू बाजू कुछ नहीं है. Every customer who's going to those gates is seeing us, and there's a guy sitting on a stool who's there ready to sell. I'm like, cool, this is a great model. And I think Sugar, for example, has really showed us how building out those stores work. So I think that's something. But yeah,
no, that's quite amazing, man.
But tell me about the entrepreneurial journey from a people standpoint. Everyone says this, and I was hearing Naval Ravikant the other day saying it's all about people. It's all about the people, and it sounds so cliched, but end of the day, I think I think about this for myself also. I think, and you speak about empowerment, which is true, right? You just trust them blindly and let them go and show you what they're capable of. But for us, I think the whole identify the right people, which is a big thing. Like there are some people who are, like there are businesses that are VC scalable and there are some not. There are some people who are startup friendly. There are some people who are not, right? So identify. Empower, incentivize, coach. I think for us that's a 4, and it's like it's not like one after the other. It's a constant process on all the other 3. Like identification is step 1, and you do that. But after that, empower, incentivize, coach. Empower, incentivize, coach. Right. So how do you think about people, and who are the people who have surprised you in this 7-year journey of yours?
So many people, actually many people, and particularly the one who is the core team. We also mentally think about a similar model because that's the model to think about startup. Now, for me, the only identification thing is, if I follow this, is I did have the benefit of working with some people. So as against, identifying them in an interview or finding out तूने उस समय क्या किया था, ये किया था, which I always find it very, very draining to my senses. I basically, if somebody has worked with me, you tend to get a sense on, where he's coming from, what kind of a thinker he is, whether he's thinking big, not thinking big, meticulous, not meticulous, his own people management skill, etc., etc. If people are meeting that bar, by and large, for me, the pendulum swings in their favor always. And in our business, of course, as we are scaling up, there are many functions, many places where you need almost person to lead it. And my bias is to actually identify from some real life experience that I have seen as against hearing from them. Once you have identified them, we follow a similar model by and large, but just give them an immense degree of independence. Immense degree.
Exemplify this, like.
For example, we were setting up our collection practices, right? Our collection practice are slightly different. Different in a sense because, number one, we are hugely sensitive to customer. Not because of we are great, people, etc., etc. I think we have seen an episode of this whole Chinese fiasco, loan company fiasco, which happened. I think the learning
that, what was that?
So what happened was there was this whole inundation or a barrage of Chinese companies which came in India. They were running some app or so. All and every rule and practices that you consider as a good practices were broken and thrown out of the window.
And what were they doing? Is giving out loans.
Giving out loans at a very excessive rate, and then following your collection practices, which at best should be called very coercive.
Really?
Yeah, and it did. So there was this 3-4 months. I'm talking about 3 years back.
I remember reading about it. I did not know what it was.
So anyway, that happened, and what we realized, and that was also the time we created this FACE organization, which is the FinTech Association for Consumer Empowerment. The 5 companies came together. We were on the founders, etc., etc. The idea was to differentiate the wheat from the chaff, or the thing you said, gems from the dross, right, getting it out, and say, by and large, the industry is not like this. So as to communicate with the customer, also to communicate with the regulator, right, that we follow, there's a practices, ethical standard that we want to follow, more responsible lending. So talking about collection, coming back to, so in our case, we had to pursue collection, but while ensuring there is no escalation from the customer. No escalation.
It's a very fine line to walk, right?
It's a super fine line. So what do you do then? What you are doing, first of all, we did a lot of analysis, etc., etc. And I can tell you one of the other myths which exists in the market. This old mental picture of we have a collection means some guy will go. Hooligans. Does hooliganism create any difference in the P&L? The answer is no. Perhaps negative, because you have to pay the hooligan.
Yeah.
Right? But it doesn't create. Not at all. And I say with some sense of, experience and looking at the data, no, not at all.
But it's what a lot of large companies resort to.
They may be a short-sightedness. They live from quarter to quarter. They have to show numbers. As much of, one can say there's an element of India is still a free market, by and large. You can't coerce somebody to make the payment. You cannot. You can you cannot use fear and other tactics to do that. You cannot. Only for a very small, teeny fraction you can do that. And I say with a lot of experience, I can tell you, we have done all and every kind where we said, boss, know this thing. There's no change in the payment. The reason the customer pays because he gets money. Yeah. That's one. And second, by and large, he was not the guy who was going to fraud.
Correct.
Right? After that, if he's a fraud, any hooligan come, these are bigger hooligans, right? So there is that. So for us, the collection became, now today with all the benefit of, hindsight, I can say this, but these insights didn't come normally, and this person I'm talking about, he did have a role to play. He came back, talking about, giving a stage to people. We gave this opportunity to him.
What's his name? What was his position?
So combination of 3 people who were holding it. There's a guy called Avnish, Vivek, Fahim Syed, Fahim comes from my consulting days also. He was part of our consulting setup as well.
Yeah.
Yeah, and this guy called Suraj Shetty. So combination of these 4 people were managing collection. And of course on the telecalling side, there's a Swapnil, so team of 5 people. Of course different people were taking lead on different this thing. On the escalation part, Suraj Shetty was taking the lead. What we figured out is that not even an iota trace, not a smidgen of difference by showing some aggressive practices. None. Then the question is, how do you do collection then? Right? The thing is, just a simple knock on the door and a follow-up makes a world of difference. Okay, give the edge to somebody. Suppose, I was talking about 87 people who paid. The remaining 13, you have to collect.
Correct.
If I follow just a simple knock in the door, gracious talk, etc., out of the 13, I would say 10 will pay.
Really?
10 will
It's
easily
a polite knock on the door, is it?
Polite means many times, so I don't, for the first 15 days, nothing. If you talk to any of our guys, they are actually customer service guys. They are basically explaining, no problem, your CIBIL will get impacted, this. They have a diktat. There is, and it was not, so anyway, I'm mixing many issues. So first is this pact. Suppose if I use many collection practice, all aggressive, perhaps I'll reach this 10 number sooner, but the ultimate number is only 10.
Correct.
It doesn't change.
Correct.
And that's the, like service standards in India have increased between 20 years now versus now. People have assumed anybody can treat you any. The same thing has happened in collection. Service standards have improved. You can't treat. Now, I have close to around 6,000 people on ground who does this collection. How do you inculcate this behavior? Because for some reason their amount is, their incentives are fixed and variable, etc. One of those guys among us, which is combination of Fahim and Avnish, they came and they said, we got a term in our company called LWP. Not the best process to follow, is a very draconian process. I would not suggest somebody, but we had to do a culture change. Many things we did.
What is LWP?
LWP stood for leave without pay. If there was even any instance of a customer putting an escalation, even if he's a posier, he's just trying to do this, no question asked. You are put on, you're out. Just out. And then initially, first this thing, some 50 requests came to me and everybody is coming to me, etc. And this Avnish and Fahim came to me and they said, don't entertain. We are doing a culture change. You have to just trust it. I said, no, his house is this problem, and everybody can. And some of them are genuine, right? Because customers also know that now they can take for a ride. Not all, tiny proportion. We didn't. Today, we just work. It's a very, very big thing. When regulator came to us, they were also amazed. So, we went through inspection, they went through many, many things. There was one aspect, no trace of ambivalence, that our customer service and our collection practices are at a different level altogether. These are not where one is being aggressive. To make that change was not easy. It took the first 3 months where the tribulations and the travails we went through was something else, but after that, of course, it became hard, etc.
But it's very hard because on one hand, the collections team's core job is to get money. They are now targeting these 13% people who have not paid on their own. So that is a slightly more problematic set of customers compared to the average. Mm-hmm. They are measured on collection. At the same time, the customer is on edge, but an escalation will mean that it will impact the team. So they have to operate with very little wiggle room.
That's the feedback that we keep coming. That you have, almost saying that you have asked me to go in the war, but without any arsenal or ammunition and all that. But the analogy or the metaphor is mine, not theirs. They don't say that, don't get me wrong. So out of this 13, the reality is around 6-7 pay on their own, unalerted. Unalerted means you call them, you distinct them, whenever they get money, they just pay, right? Not even a simple nudge doesn't. 1 or 2 fall similar to the category you said, forgetfulness, right? They are not, and all of a sudden they will come and they will pay everything, whatever is there. So they may have defaulted on 2 EMIs, but then they will say, oh, I have defaulted, I'll pay the full 6 EMI in one shot, right? All that thing. The remaining one where there's a collection and the knock that happen. As I said, it all stems from the fact that does it really make a difference in my P&L? Does it? If it doesn't, then I better be following that culture. Yeah. And putting that culture is difficult because whoever I'm going to hire, the industry follows a different culture. So how do I put the culture? As much as I do all the positive reinforcement, etc., I also do negative. I said, boss, this thing, sorry, this is not the place for you. I have to take that call. And of course that actually acts like radiates in the organization in a very different level. So things like that. So people have done this. Similarly, some of the products that we have opened, I mean, the names which comes to my mind are many people who have contributed, built it, gone out of our way to create something. So I'm a big believer of, entrepreneurship, as much as it can be defined in a very, very esoteric, way. But in a simple way, if there's a clarity on some basic things like, what is your differentiation? What is your value proposition? That's the other input I'll give to any budding entrepreneur. Never take an easy escape from those questions. Because those are very, very important questions. Many people want to jump without asking, what is, bata do, kya ho tum? What are you offering to the customer, right? And people just think, no, the market is big and this, that, etc. But anyway, so that if you get, those things right, what is the value proposition? What do you stand for the customer? What is your business model? If that clarity is there, by and large, 80-90%, it's all about people. Just give the stage to people, as I said, and they all are ready to grab and excel and perform in those stages.
It's amazing. I think, Zidan, for me, I think sports is hugely analogous to entrepreneurship in terms of learnings. Like there are superstars there, and all sports. Like, I try to, Rahul Chaudhary, I don't know if you ever worked with him at McKinsey.
No, I've not worked with him.
Again, just someone who, we talk about sports all the time in the context of entrepreneurship. And I feel like, and there's something which I tell young kids, or at least my friends who are parents, that बाकी जो भी कर लो बच्चों के
let them
खेलने दो यार, like let them go and be competitive in some sport or the other. Individual team doesn't matter.
There's a friend of mine, his name is Ashish Prakash from campus. He used to say this. He comes back and he says, after the football match, he says, oh, I like the way you play and all that. In a sense saying and he told me one of those takiya kalam as they say. So he says, when you're playing in the moment, you are your honest best.
Yeah.
Right? All the aspects of your personality comes out. Because you can't be posturing there. You can't be playing to the galleries there. If anything, only gallery you are playing to is to score a goal, in this case of football. Which I thought was, and I have the same advice for my kids and otherwise, which is, let them play.
Yeah.
It teaches, as I said, being a good loser.
Yeah.
Oh man, what a great skill. I think one of the struggle I have with some of the kids I interact with, I do play soccer sometimes.
We never played soccer together. Rennie used to keep coming. I never played with him.
I would come and play with Rennie many times. In fact, last time when I met, I invited him, he should come. So today we have, every week I play. You should come or something next
Bombay, I don't play in Bombay, but I would love to be, when I'm here, I would love to see whether you're...
Why do I remember there was one, very Golki knows tonight? No. So, Shivaji Park mein ek baar
Karthik Rajendran, Siddharth Gopalakrishnan, Karthik Rajendran, Malcolm Gomes.
Malcolm Gomes.
Yeah.
He was the organizer, right? So I played a few times with him. So now also we play. But the sense I get is that people, the tendency to, the new kids which I'm talking about, they don't know how to just step back. They're otherwise very, when I play with, so one of the most embarrassing moments I have when I go to a building, right? Because these are like 12 standard. They say, uncle, please don't. So I still say, no, please insist. And they're okay, be on the defense and all that. So I go there. And I don't know if you realize, the general decorum on the field, since of course, older than you, has actually become much more higher. I will be playing prof and, this thing, they'll say, boss, cool down, right? So I will rather cool down then. And, but that's one thing. But on the negative side, I see, the kids today, they just struggle to take failures. So they just, so that's the other.
Do you think you're putting people in lesser positions of where they have a propensity to fail? Like pushing people in the deep end of the pool was something that again, like I said, the baptism to fire, by fire was just allowing them to fail. But do you think parents and society is protecting people from failure?
Yeah, I think it is going all top down. One is, I think they are being put in the deep side of the pool, but the expectation is such. There's some level of mental relativeness which exists in the this thing, that, oh, you have to just excel everywhere. I don't know why.
Yeah.
The whole act of saying it's absolutely fine. In fact, most games are lost and won.
Yeah.
Is somewhere being missed out in a big way. And I think it's more to do with this rather irrational, innate desire from parents or the well-wishers to see you as a winner always. Maybe from there.
It's crazy because I remember now, yesterday I was talking to a friend of mine and she was telling me that today people are doing 3 summer interns simultaneously, 2 summer interns simultaneously. We want to hire an intern for the barber shop. No? We want to hire an intern for the barber shop. We have 900 applicants. 900 applicants? The guy we chose, he's a 20-year-old kid who's written 30 research papers.
Oh man.
So I was like, okay, I really need to see these research papers because I refuse to believe a 20-year-old can
And he
write.
has written it.
He's written them.
Oh man.
Maybe he's written them, but I want to see. And then I speak to young kids. I was at Masters Union. The founder Pratham is a dear friend, and undergrad kids who are getting into college, 18, 19, or 21-year-old who getting into MBA or whatever, and you talk to them and they're like, I'm on my 3rd startup. Oh, really? That's so fucking impressive. Third startup, and now I'm pivoting to something. And first startup was this, second, and then you go a little deeper, and you suddenly realize that the width of experience and the access to language and all of that is very, very high. But the depth of those experiences is very limited. Of course, because you're 19 years old, you can't really have it. But I cannot imagine the pressure on a 19-year-old because all his 19-year-old friends are also on their 3rd startup. So and also it's a world which is very content driven. So हमारे टाइम पे जेई का फिटजी का वो हर महीने में एग्जाम होता था, उसमें कौन फर्स्ट आया सेकंड आया, दैट वाज लाइक द एक्सटेंट ऑफ कंपैरिजन. Today the extent of comparison is people are building content, people on LinkedIn, people on social media, people who are starting 3 startups, all at 18, 19. So you're right, there's a pressure to excel or emulate your parents who are successful. At the same time, you don't have enough time. Also at the same time, you don't want to fail. So how will you do it?
No, you're right. I think the depth is absolutely missing, and I don't blame them, right? If I evaluate myself also over time, there's a sense of impatience I run with, which perhaps was not there 20 years back, right? We just live in a world where we want quick this thing, where we have to go deep, I'll go deep now. So that part is there. I mean, it's a reflection of what we are doing, etc., etc. I think the other part is the youngsters. There is, because the conversational thing has gone away, right?
Yeah.
I remember when I was growing up, to sometimes laugh on your misfortunes and miseries was an act of catharsis and friendship, right? Which is to say that, and only those people can crack jokes who are lowest in the order. Because it comes, irony and satire comes from there, right? You can't be a topper and you can do this. And that created a culture that was fine to first have, fine, but not Santir Mara, right? Which also, I mean, some part of that is also missing out because things are not very physical in nature. They are more on only the snippets are shared as against the full story, etc., etc.
Yeah.
So those are also.
And depth comes with time. Depth comes with experience. You can't fast forward some of these things, especially in the context of business, entrepreneurship, or even sport. You can't expect a 12-year-old academy player to have the vision that Tony Cruz or Bellingham or David Silva had. You can't.
You remember the instance which also sounded very, very, I would say, confidently arrogant from Ronaldo. He has moved to Juventus or some.
Yeah. He had moved to Juventus and now to Al Nassr.
So Juventus he has moved to. And they have lost 2-0
to Atletico.
I remember that. And he gets out of the stadium and there's a lot of footing and he gives this thing some 5. 1-5. And he's basically trying to say, because it is me who has won Champions League 5 times.
Your club has won it 0 times.
You have won it 0 times. And this is immediately after losing 2-0.
Yeah.
Any football pundit would have said, this arrogance is completely misplaced and not this thing, etc., etc. But something to be said about experience and depth you talked about. That guy comes back.
3-2, right?
Oh man,
Patrick, what a game.
talk about
What a
coming
game.
back. What a game, right? And then you said, oh man, of course, Ronaldo has got it many times right with his arrogant, not so arrogant, call it confident and almost.
I think he just manifests it.
He manifests.
I think he manifests it.
Yeah, sometimes it can be a source of positive energy for him. But yeah, it does count a lot to have depth and experience to say that, no, I'll come back and then do 3-2. Oh man, something to be said about that game.
It's crazy. It's crazy.
Yeah.
I agree. I think there is a huge amount of value in time and patience, and that's something that as an entrepreneur I've struggled to learn. You know, honestly, the fact that building a brand, for example, or building a lending book, for example, takes time. You can't have a long-term loan and then say I want it now. The fact is, it's a long-term loan, and that's where you're going to make money. And you know, it's okay to take time to identify who the right customers are and build the right product for them and so on. It takes time for me to recognize that the trimmer market is offline as much as it's online, and I can build it offline as well. You can't do that on day one, and no amount of intelligence can predict this, right? So there is a value to, that's the thing, there's a value to hindsight, but hindsight happens only post facto. So give time for the post facto to happen.
Yeah. Oh, absolutely.
So that's, but anyways, I think as this is very, I love conversations on sports and philosophy when it comes to entrepreneurship. But as we reach the twilight of this conversation, Ranveer, I think 220 crore PBT, PAT, yeah, 220 crore PAT, unbelievable. You're an IPO-able business today if you want to. I think IPO in the offering. What's the long-term vision? Do you think that, of course, there is an element of just identification of market, creating a great product, the right team. You guys have done a fantastic job with that. But going forward, what do you now want? Like, when's the IPO? What do you want to do with the company? What's a decade-long and half-century-long vision of this one?
So first of all, if I do an IPO, it will give me good value, money, and I'll earn a lot. So liquidity, and big money, and etc. See, to be very fair, as much of a mercenary instinct I have, IPO is just an event for us.
Correct.
I'm not. There's a reason we want to do IPO, which is particularly around thinking about our next phase of growth and being able to raise more capital. I'm not into a situation where investors are pushing. Investors are very, very matured guys. They are not.
So your investors, how much money have you raised in equity?
In all, we have the company. The total which has been infused is close to around 130 million.
Okay, so 1,000 crores is coming.
Yeah, and combination. So there is my cap table looks like following. I have Singapore government as the main investor. They are through Vertex Growth Fund. They do usually $40-50 million deal. There's another sovereign called Brunei Investment Authority. There is Systema, which is a VC firm.
Yeah.
There's Venture East and India Partners, which are the earliest investor. They usually do 1 to 5 million of investment. And to the company structure is 40% owned by promoters and employees, and the remaining 60% owned by investors. So I'm saying IPO is just one event for us, and I genuinely believe that, not for the other part. I mean, now that I've become slightly more intelligent on the market, we want to do it at a time when we have scaled up enough. When I say scaled up enough, today we are at 3,400 crore. Perhaps the right number is some number between 10 and 15,000 crore.
In your lending book?
In my lending. Which may mean 2 years from now. I know there are instances of, very successful one where people have done at a fraction of that size and done really well, etc. I think our belief is that we want to build it at scale and then go out and then build it and so on and so forth. But that's only one part of it, which is the value creation part of it. I feel extremely excited at this stage. I truly believe we have only seen a very little bit of fintech evolution here. There are many, many more things to happen. It's almost a stage where some fintechs are consolidating. I don't want to use, misleading labels like it's fintech 2.0 or, that, those cliches, this is now the second phase and this, none of that. But look at the opportunity. There are close to around 200 million nameless, unrecorded people in Indian market who are credit only one need. many more things which can be added on the credit. The idea is to be somebody who is serving their financial needs. In 10 years' time, it's difficult for me to say whether we'll become a bank, whether we'll become some, digital bank, or whether we will continue to do this. But one thing I'm very clear is the current 10, 11 billion will go to a much, much higher number if all goes as per the plan. It will become a significant share of Indian population. We'll end up taking a larger share of their pie as far as financial services needs are concerned, which would mean going beyond lending to do savings, protection, investment products also, and being truly honest to our segment. We don't want to go after a segment which are not underserved. And I think the way, at least the maths we have done, this segment is going to be supremely underserved for a very, very long period. I mean, if you take this growth, which we consider as a great growth, and just multiply it, compound it over the next 10 years, still you find India is nowhere close to, the benchmarks, etc., etc. So at least I feel extremely excited. That's one part. The second part, I do have a data bent, etc., etc., which is, I do draw insights. As I said, the vast possibilities of data has not been explored at all. AI and all those are just coming in there. The kind of services you can create, they will take this to a very different orbit altogether. It may just mean that financial services can be a way to just... it can be, today when you think financial services look like a different product altogether. This is not a category you think in the same way as, the shaving thing. So it will add to a different level of layer of convenience, etc., etc. I also feel that because the landscape is so wide and virginal in some sense, it's important to keep head over your shoulders and be extremely compliant, right? Because otherwise it's very easy to be on a slippery slope, get into the mode of, because financial services does require some level of, compliance and very, very unambiguous level of KYC and things like that. So that's the other pillar which is rather important. But yeah, those are things that one wants to develop on.
No, I wish you the very best. Ranveer, I think finally, everyone who's watching this, and this is the reason why we started the barbershop, was we believe that there's a huge audience of people. We need to create 1 million jobs a month. And we won't do that by natural rate of growth of recruitment in the country. Right? It has to happen through unnatural step changes, happens through more people like you who start companies. Right? And the good part is there is now supply of people who want to do that. There is access to capital, there is some market that is deepening, and over a period of time will happen. But people still are on the fence, should I not? I feel that the ratio of, the metric of success for a show like this is, even one person who's watched both of us talk for 2 hours, at the end of it says, I actually might want to do something, let's say in the lending world or in the fintech world. That would be mission accomplished in a way. So any word of advice before we sign out on what that could be?
Yeah. I think 2 things come to my mind. First is, if you are half there, definitely take a plunge. It's unfair for me to compare this versus other industry, but I can tell you, financial services will easily see many, many new companies coming in. Of the 4 or 5 competitor names that you mentioned, if value is some motivation, value can be a great motivation. I have no doubt 2 out of those 5 companies will be perhaps valued at 40,000-50,000 crore 5 years from now. And I'm saying it with the trend that this league table is a changing one, but is also a stable one and things like that, right? It is for them to, the budding entrepreneur who is in the decisive line, to decide the opportunity is massive. Many problems to be solved here. The problems are to be solved not only in terms of just going out to the customer and serving them, but a lot of enablement that needs to be done. Do a little bit of research to build that intensity of conviction, right? May not make a blind call, but do that, and my sense is the conclusion is not going to be any different. Never take a shortcut on saying these questions which are usually raised in investor discussion, what is your moat, right? So similar thing, I would say don't resort to an empty moat.
Yeah.
Do have some moat. Do think, research, talk to the customer. I don't know if you are somebody again with as similar mercenary instinct as me. I can't think of many businesses which can make you a billionaire in a short period of time.
Yeah.
And then the urge of the whole high of serving a large base of customers, impacting their lives, and fundamental way is something which can be high. You can get only in this segment. So those are some of the thoughts which comes to my mind, which one should evaluate, think, and take the plunge.
Awesome. Ravi, there's been a fascinating conversation. Thank you so much for taking the time. And, I think that this could easily have a part 2 to it. We haven't gone into the depth of Kist versus Ring. We haven't gone into the depth of raising capital. We've not gone into the depth of what an IPO plan looks like. It's been about the business and about the philosophy of entrepreneurship with sports sprinkled on it. So for me, it's been absolutely amazing. But I think part 1 has been great. And thank you so much for taking the time. And I hope that, you enjoy the conversation when it comes out. Because, I think there are entrepreneurs whose stories and whose points of view need to come out a lot more. Like, there are conversations at the end of which I feel that or karna chahiye. Like, there should be a series of discussions, especially because of your depth of experience in the space itself. So I think we should think about doing more of this.
No, we should do more. I am glad, and thanks for inviting me. I'm very glad. I also have this philosophical bent which we can go long.
People who read a lot have it.
One is that, and second is, there's a little bit of a late stage interest I've got. An evening properly started on a conversation. I find it very difficult to stop. I'm the one who will be the last one to leave the bar.
Really?
After you've got the captive audience which I was talking about. So there is that streak as well. So we should nonetheless be it here, or otherwise we should catch up and continue our discussion. Perhaps sprinkle more of sports analogies and then build on that. No, thoroughly enjoyed, man, this discussion. Happy to do it whenever you think.
No, absolutely. And the next time, what we should do it in Delhi. I'll host you at our offices.
Oh, love to.
And we would, I'll show you around. I may make you meet our team.
Yeah.
And would love to show you there as well.
No, would love to.
Awesome. Thank you so much.
Thanks, man. Thank you.
This was badhiya tha, yaar. This was very, very good.
I mean, just request for some